risk. Taking profits is a good thing. But, the use of the backstop as a form of selling, where you can sometimes, sit right below, where the market's trading, going, I'll let the momentum take me out and then just kind of trail it up. Now, we don't use a resting trailing stop. I know some traders who do. That's fine too. But it's that idea of, you'd be surprised if that gap had just gone, which is how we handled, say, the situation of Micron earlier this year. You just keep ratcheting up your backstop, and then as the momentum finally wanes or turns down, it takes you out. But that's that's in profit protection management mode when you're well extended from your buy point and you already know you're going to take the profit. That's where we like to use that tactic.
Yeah, something to note. So here before the earnings, of course, it could have been just as much down, but they were still at a 20% profit from their purchase. They already de-risked the part of the trade. So, and after the natural reaction, they probably had their break even moved up, or the stop loss rather, to the low of the natural reaction. So as mentioned, got close to it, but didn't actually touch it. And then certainly when you get the gap, off the earnings, you're going to definitely take some more off the table. And then, once, as I think statistically speaking, about 50% of the gaps fill, the other 50 don't, but, a classic backfill of the gap, and that's where you just got to take the risk.
One thing that stands out for me, before you jump to the other one, Bob, if you go back to mod for just a second, this and Vicar both had a little bit of a similar larger setup where you've got a pretty big base, a momentum move out of that base, and then you had the consolidation that set up that then you guys